currently Saturday, and I just want to show you guys some simple market structure on USD JPY and how to trade USD JPY. If you're a beginner trader, or if you keep blowing your account, losing, if you're an SMC trader, this is going to be the video for you. Yeah, so let's get into it. So the first thing first, before I want to say anything, always trade at least a minute. Hold on. Always trade at least a minimum of 5 pairs. Okay, so in the maximum you want to have is 7 pairs, not 10 pairs. If you're good at trading 10 pairs and that's what you think you can do, then go ahead. But for me, I don't trade 10 pairs. The maximum is 7. Hold on, guys. I'm trying to just fucking do this shit. Give me 1 second. Fast forward. Let's see. All right, guys. So the first thing you're gonna want to do is, like I said, I only have 1, 2, 3, 4, 5. I have 6 forex pairs, and then I have 1, 2, 3, 4 futures pairs. And so the futures or the crypto, that doesn't count in terms of EVA, but in regards to forex, you want to only have 5 to 7 pairs. Okay, cool. So once you have your 5 to 7 pairs, what you're gonna do is, if you're trading Japanese yen, because that's what I made the video about, we're gonna first start off on the 4 hour. Okay, so on the 4 hour structure, if we go down here, you're gonna notice something. Here's a tip: always zoom all the way out when you're doing market structure, because if you zoom all the way out, it's gonna clearly show you the bigger picture and all of the structure that's most significant. So what I mean by most significant is this. So we zoomed all the way out, and in the significant highs and lows, as you can see, let me zoom out again. What are the current significant highs and lows on the 1 hour? On the 4 hour. Well, they're going to be here. If we zoom in. Okay, so if we look here, we can see the most significant on the long-term pieces of market structure are going to be where I'm drawing the blue. So this major low, this major all-time high, this major low, this major all-time high. And so right now, if you notice, we have a couple things that we have to look at here. So if you're trading UJ, US dollar, Japanese yen, it takes a long time to move when you're on the 1 hour, so you're going to want to switch to the to lower time frames. I'm just using this for major confluence to see where we are. And so if you know me, I only trade imbalance gaps and order blocks. So imbalance gaps are basically a result of high volatility in the market, because when healthy price action always goes up, down, up, and also down, up, down. That's healthy, because price goes down, goes up before going back down, and goes down before going back up, right? And so sometimes when we have a lot of real world economic events like interest rates, unemployment rates, things like that, and you don't necessarily have to learn the specifics in all those to trade technical analysis. So here's what I mean by that. So when we have economic events and things in the market, or let's just say demand or supply, the market will become so affected. So if we have a lot of demand in the news, right? So let's say news comes out and we have a lot of demand, so the market's going up because demand. Okay, so what that would mean is sometimes because of that demand itself and the volume within that demand is so high, there will be times where market won't come down before going up. Sometimes the market will just go straight up, and then it'll kind of consolidate a little bit and do something and not go anywhere. And when this happens, right, when all this demand occurs in the market, what usually will happen is it will leave a gap behind. So you see all of that space right there that I just drew, all this blue space? We call those ranges, price ranges, because when price moves at a substantial rate up or downwards, it leaves behind a range, a price range, because it moved with range. It left a range behind. And so we actually are, all we're doing when we're trading forex is we're trading these ranges. Well, when we're trading smart money forex. So when you're trading smart money concepts, smart money forex, that means you're trading with the banks and institutions. And so when you're trading with the banks and institutions, um, they will leave behind these ranges because they're either in the current moment trading the market, and so because of that, that leads a lot of volatility, which can lead to a lot of order blocks, supply and demand gaps, all that, you know. And so, like I said, when there's news or whatever reason the banks and institutions are trading, they leave behind these giant gaps. And so within these gaps, you can trade these gaps because price always reacts off of these gaps. So what I mean is, if we're trading a demand gap, we wait for price to come within the gap itself, which was where the arrows pointed to, this blue area, and which price did right now, which we're looking at my drawn example. And price will come into this area, and once it's this area, there's usually either a consolidation before reaction or an instant reaction. And so the reason why we trade gaps in it, or you can call the full name imbalance gaps, it's a real term, you can look it up. We trade these areas because the market hasn't been filled yet. And so when the market fills, it then goes up. Just like I said, we always need to have a movement going downwards before we go up. And so, yeah, so that movement or entry that we're trading is we're buying something at a cheaper price. So like if we're trading USD Japan, and then that big movement that I just drew, that the gray arrow is pointed to, starts here, that big movement started here, that means that when it started, price was cheap, because now at the end of the range, at the top of the range, price is more expensive because it's at a higher price. Because if you look to the left of the screen here, if you're not watching real, this is for people that are watching long term. If you're watching the left of the screen here, you can notice, if you look to the the right, not the left. If you look to the right of my screen, you will notice all this shit right here. These are all numbers, and with these numbers basically represent the price scale. And so at the bottom where I drew that blue line, we were at 140. In the top where I ended drawing that long range blue line, we were at 146. So obviously 46 is higher than 40, right? And so if you're buying something, why would you want to buy when it's at 46? Wouldn't it be better to buy something at 40? Right. So that's why we want to always align this analogy with our entries, because your entries should always be at low prices no matter what strategy you're using, because that's how the markets work. Supply and demand. You buy low, sell high, but it's a matter of where you're buying low and where you're selling high. And yeah, guys, so if we go back to the chart here, and if we look at this gap that I just drew here, and sometimes gaps will be long, sometimes gaps will be short, but they are indeed still gaps, because filled gaps always have a wick. Like if you learned about candlesticks, how there's that line poking, you see how on my screen the black and white candlesticks, those little boxes, how there's little lines that pop out of them, those are called wicks. And so these wicks tap into our entries, which are imbalance gaps and order blocks, the only two trade setups that I trade. And when I see, like, you see how that gray box that I drew right here, you see how that gray box that I drew is if you look at the gray box that I drew and you look at the wick that's tapping into it, where I drew that gray, where you see the arrow right now, that wick is tapping into that box. So a lot of times when you're trading with the banks and institutions, when you're trading smart money, you're trading forex, you want your wicks to actually tap and go. You don't want your candle bodies to hang in your entries. And you can still have good entries and have the candle body in, but the majority of winning consistent trades that we take and I take that work for me are trades that have a wick, like you see here, tap into your entry. So your entries always want to have a wick tapping into it, and then a reversal. Because wicks, if you notice, if you look at all wicks, there's usually a reversal after the wick. And so we're trading this. And so we're on the 4 hour. And what I'm going to do, like I told you earlier, is since Japan moves so slow, it could take like a whole week for that to move, or not. So we're on the 1 hour, and I'm guessing by the time, since today's Saturday, by the time Monday opens, Japan will continue either consolidating or drop in price, because we are at an all-time high on the long term. But in the short term, if you guys look, we have bullish price, right? Because this is the 15-minute structure. Because the 15-minute, if we zoom all the way out on the 15-minute chart and zoom all the way out like I am right now, we notice that, what do we see? We see price going up, down, more up, and down. And so since we're if price does not reverse from that gray box, we basically want to be trading this entry that I've set here. And yeah, guys, this is just a way to keep track of your trades and understand how the market works. So if you have trouble winning consistently and winning consistent trades and not blowing your account, the first step is understanding market structure. So zooming all the way out on TradingView and using a pencil tool or a color tool to differentiate the different types of market structure. So the blue you're seeing on my screen, the blue lines are basically a reflection of the long-term structure, which is on a higher time frame. On the lower time frame, 15-minute to 5-minute, our market structure is going to be those clear gray lines that you're looking at. Okay, and so when you start doing this is going to help you to know where you're at in the market so you can understand what you're expecting, because that's what you need to know in order to get into trades. But yeah, guys, I don't want to make this video too long. I just wanted to make it a quick video, but I hope this helps you, and peace. Let me just stop the video here. Oh yeah, and if you guys also have any questions or information, let me know on Instagram. It's in the comments or whatever, reels. You can just ask me for help. I'll help you guys. If you guys are having any issues with where you're at in your trading journey, I'd love to know. I would appreciate it if you guys can share with me where you're at, your goals. Like, where are you guys, if you're watching this, where do you want to be in your trading journey? Where are you at in your trading journey and your goals? And yeah, guys, that's pretty much it. Peace.